Gold silver ratio is now 90 to 1. It's changed quite a bit in the last couple of weeks. And now it is represented here in this 5 kilo bar of silver against 1.75 ounces of gold. I'm sorry, I can't hold this any longer. It is far too heavy. It's very impractical. Now, does that mean that you can play the ratio? That ratio has changed quite a lot. We'll talk a little bit about that in this video, as well as look at this incredible silver bar and, of course, its ratio to gold, and whether or not playing that ratio is actually a good idea or not. Certainly is an interesting thought experiment, but the practicalities? Well, let's find out. Hello everybody, Backyard Bullion here. Welcome to another special edition of In Focus Friday, where we are playing with some absolutely incredibly cool things made of silver and gold, courtesy of Chards, who are very generously giving me a big, I say giving me, I'm not keeping it, bloody hell, there's over £100,000 worth of gold and silver on the table here, but they're giving me access to play with some beautiful shiny things here on the table. And today's video, we're going to be focusing on this absolutely incredible 5 kilo Umicore bar, which I've neatly arranged 1.75 ounces worth of gold on top, because whilst we're looking at this incredible thing, we're also going to talk a little bit about that gold silver ratio right now. It's fallen a fair amount from the 100 to 1 where it was a few weeks ago, and now at 90 to 1, that conveniently means a 5 kilo bar is worth 1.75 ounces of gold. And let me tell you, having sat here and fluffed my video intros a few times and holding this 5 kilo bar in one hand, my arm is getting pretty tired, and it is not going to be long before I have to put it down, and we'll look at it periodically as we go throughout the video. It's impractical. This huge value that's locked up in here can be represented by just 1.75 ounces worth of gold. That's what, like 50 odd grams worth of gold compared with 5 kilos worth of weight in the silver bar. The practicalities cannot be underestimated there. Now, there are a lot of people who will say that silver, of course, has way more potential and it will potentially go up even more. And we're certainly seeing that change. You know, the silver ratio, that's what we're talking about in today's video, has gone from 100 to 1 down to 90 to 1. That's a big swing in the last couple of weeks. And if you'd bought silver just a few weeks ago, you will be looking really pretty on it right now. Certainly compared with gold, which has been a bit stagnant of late, although it's had its ups and its downs, and it will continue to have its ups and its downs. But the long-term nature of precious metals mean that you really shouldn't be too worried about those ratios. You can maybe look to play the ratios. Whether or not you would perhaps want to is another matter, and we'll talk a little bit more about that as we go throughout the video. So don't forget to hit the thumbs up, and if you are enjoying our content and not subscribed, then please subscribe. I'd love to get to 100,000 subscribers by middle of next year, which is our 10-year anniversary of making videos here on YouTube. So please subscribe if you're not already. Now, I've done a few videos in the past about playing the ratio, and as I'm sat here in a bullion dealer, I thought it would be a good idea to revisit that. And the idea that you might be able to play the ratio if you'd maybe bought some silver a couple of weeks ago, and that has now dropped about 10% in that ratio value, could you just rock up to a bullion dealer and start trading out more money? The principle of it, perhaps if you don't know, is that let's say the ratio started at 51. You bought 50 ounces of silver instead of an ounce of gold, and then the ratio goes up to 100 to 1 of 50 ounces of silver to gold. That means that that value of the silver that you've had has changed, and you would then be able to exchange either the gold or silver that you've bought at the beginning of that experiment to get more value and more metal in your stack. And if you then play that ratio up and down all the way, you should end up with a lot more metal in your possession, but no extra cash spent. However, the practicalities of that is often a lot more difficult. The realities of it, I should say, is often a lot more difficult, because there are, of course, premiums attached to silver, especially here in the United Kingdom. If you're buying a big kilo silver bar like this, from a dealer anyway, there will be a 20% uplift on the price of it, which is sales tax, VAT. Now, a lot of people really don't like the idea of having to pay sales tax on their silver, but unfortunately that is just the way it is here in the United Kingdom, and on silver coins as well. There are, of course, ways that you can buy from the second-hand markets and perhaps look to mitigate that VAT side of things. You've got risks when you're buying from any second-hand market, of course. you might not get the actual thing you ordered, or what you get might be fake. There are plenty of reasons why you should avoid second-hand markets, but we can't ignore the fact that those second-hand markets are there, and you can maybe look to play that ratio on that market. But again, because the second-hand market, unless you're pretty much selling one of these, which, let's be quite frank, nobody really wants these anymore. They're not capital gains exempt. They're far too big and impractical. But they still do have an inherent value attached to them. There is no doubting that there is monetary value in this big giant brick. But still, the point is, if you're buying Britannias from the second-hand market, you're not going to be paying too much less than from dealers right now. There is a buoyant market for them right now. So when you're playing the ratio, you've got to be very careful about that. You've got great intentions going, yeah, I'm going to buy my Britannias at XYZ and swap them out for gold, and then I'll do that again in another month's time. The practicalities are not great, and you've got to take into account all of the things like postage and posting your gold off to a dealer, or posting it off to the person who's buying it. Or if you are doing it on the second-hand markets, of course, the other thing to factor in is that the markets might change quite considerably in the short space of time that you are sending gold off and getting the money in. That could be a big factor to think about for some of you out there. So playing that ratio, yeah, it's definitely possible, and there are a lot of people who do it, and I won't begrudge anyone who tries to do it and does it well and makes that return. But is it something that you can genuinely rely on? No. What I think it does indicate, more so than anything of trying to increase the amount, I'm sorry, I can't hold this 5 kilo bar any longer, it's far too heavy, but what it does indicate more so than just simply trying to increase the amount of precious metals that you've got in your stack by not spending any more money, is it gives you an indication of what the right metal to buy might be. Now, of course, I'm not here to give financial advice, and I've been on this channel long enough to tell you that every time I look to go and buy some gold or silver, the price will rocket downwards as soon as I've gone and pulled that trigger. So who knows where things will be in a day, a week, a month's time. But you can say that the fact that the ratio was at 100 to 1 for silver and is now at 90 to 1 for silver, the time was right to buy silver at the 100 to 1. And that's what we said a couple of weeks ago when I did that video. Does now mean that it's 90 to 1, it's time to buy gold instead of silver? Well, it's anybody's guess, quite frankly. But what it says to me is that there is this sort of range of movements in the gold and silver prices that we see. There will always be that range of movement. Silver is a lot more volatile than gold, of course. Gold is that monetary hedge. There's a great phrase that gold is the currency of countries and silver is the currency of its citizens. And that is often correct. It is the gold that's in the vaults of Fort Knox, if you believe it's there or not. That's a question for you to answer. Or in the Bank of England, that really makes, although Gordon Brown sold all of our gold, but the point is that the gold that countries hold is what fuels economies, not so much as they're used to in, of course, the gold standard days. But gold is the better long-term hedge. So we'll see where the ratio goes to. I would not go and rush out and sell all of your gold for silver. I would very much caution you guys to not try and play the ratio unless you really know what you're doing or it's right for you. So there we have a really good example of that ratio, and it is quite staggering how different it is. Cool Kids Club, you know what to do. 463999. That's a cool bar serial number, isn't it? To have 999 on the end of it. It's a big unicorn one. There we go. There's the 999 at the top, and of course we've got 999 on the serial number too. Very, very cool indeed. And that 1.75 ounces worth of gold compared with the 5 kilos of silver. I know what I'd have in my pocket any day. Well, I wouldn't have pockets anymore. I think it would probably rip out through the pockets if it was a 5 kilo bar stuck in my pocket. But anyway, look, I begin to ramble. There we go. Thanks all for watching. We'll see you on the next video. A big thank you again to Chards for their hospitality today. And there are links in the description box below. You can go and find out everything you need to about them. Thanks all, and we'll see you on the next one. As always, please make sure you like, share, comment, and subscribe for more.